Hello, this is Stephen with Cardinal Ethanol, bringing you some of the details of how a producer accumulator works and some of the information that it's used to calculate how many bushels will be accumulated per week. First, we will start with the disclaimer. The information contained in this document video is to be used for training or education purposes only. If it or any part of it is used for trading purposes, you must realize there are financial risks. Okay, now let's talk about some of the variables. In this case, the base bushels. Notice I did not use the term contract bushels. It's the base bushels because that's what's the term I use to describe the bushels that are in the base to decide how many bushels will be accumulated per week. In this situation, the base bushels are 10,000 bushel. You can see over here we're going to do it for 10 weeks. So if there's 10,000 bushel in the base bushels, that could be divided by 10. That would be 1,000 bushel. I do always say this up front, even though it says base bushels 10,000, if the market activity is as such, those base bushels could turn into 20,000 bushel. The accumulator price is $4.50. Let's kind of go over that. If the closing settlement price on pricing day, in most cases a Friday, is at or below the accumulator price, the bushels accumulated that week will be the bushels accumulated per week, something I call a single. If the closing settlement price is above the accumulator price, the bushels accumulated that week will be twice the scheduled amount for that week, something I call a double. And then while we're here, let's talk about the knockout price. The knockout price provision, if any time during the electronic or non-electric regular CBOT trading session, the reference futures contract trades, in this case it's the December futures, or settles at or below the knockout level price, no further accumulation will take place. The bushels accumulated to date will be accounted for, and a final contract with total bushels accumulated will be mailed. Okay, so let's kind of go through this and see what it looks like. The first week, the price of December corn futures settled at $4.31 1/4. That is above our knockout price, but at or below the accumulator price, so that's a single week. Week number 2 is $4.45. Again, that's a single, so you can see so far we've accumulated 2,000 bushel. Real simple, 1,000 bushel a week. Week number 3 closed at $4.50, but not above. It's at or below, just like it says right there in the comment, at or below. In the 4th week, what have we got? Oh, it closed just 1/4 cent above. Again, that's above. So 4.50 1/4 is above, so that week we will accumulate twice as many bushels. 2,000 bushel, that's what I call a double. The next week closed at 4.60. Again, that's above 4.50, so that will be considered a double. The 6th week, 4.80. Obviously well above the accumulator price of 4.50, so that would be a double. And this is the kind of market activity you may have in the middle of the summer where the market starts to be concerned about market conditions that drive the market higher, whether it be a weather market or etc. But this is something that could influence the markets to trade higher. But then we get into the 7th week and we can see that, okay, whatever was making the market go higher, trade higher in the previous 3 weeks, now some of that action is gone. So now we saw where the market closed at $4.49. That's a single. The next week we closed at $4. That's above the knockout, but below, and it's in that range, so that's a single. The next week, $3.80. We are still above the knockout price. And the 10th week, we closed at $4. So you can see there on the 10th week, we closed at $4, and we add up all these accumulators. Obviously, it would have been 10,000 bushel had it been 1,000 bushel a week if there had not been any doubles. In this case, we had 3 doubles. That adds an extra 3,000 bushels. So in this contract, there would be a total of 13,000 bushel accumulated. Now I'm going to pause here a little bit and move on to an example. It's almost exactly identical, except this time we'll have a prices trade low enough where they hit the knockout price, and you will see what happens there. So I click this. I'm going to set this up. Okay, now let's see what happens here. Everything's the same. We do have the disclaimer. We've got the same accumulator price. We've got the same knockout price. Our base bushels, again, are 10,000 bushel. We would normally accumulate 1,000 bushel a week. So let's see what happens here on the first week. If we closed at 431 1/4, that would be a single because it's above the knockout and at or below the accumulator. Week number 2, 445. Again, we are still accumulating bushels at this December futures price of 450. The third week, right at but not high enough to cause a double, as you saw before in the other example. Now the fourth week, I think we had the exact same thing, 450 1/4. It caused a rally in the market, and the December futures closed that day, that Friday, above the accumulator price, so that week we would have had a double. And then we get into the fifth week, we can see where the market has settled back down or it has gone lower. We're trading at 430. The next week we are trading even lower. We traded at 401. That scenario, we're still above the knockout, but again, all the bushels accumulated so far. The 7,000 bushel would be accumulated at the December futures price of 450. And let's see what happens here. Okay, the market did close or trade at the knockout price, so we stop accumulation. This contract would end as far as the accumulation. A total of 7,000 bushel would be accumulated at a December futures price of 450. And just like in the other one, over here in the 10 weeks, you would be able to deliver these bushels based on what the contract detail said about delivery, and you would be delivering 7,000 bushel against a December futures price of 450, and all you would have to do is set the basis. In this scenario, depends on what the market does after that, but this contract would be completed as far as accumulation. If the next week it closed back above 375, that's immaterial. This contract hit a knockout price, so the accumulation stops. That's it. Again, this is Stephen with Cardinal Ethanol, bringing you some information about the knockout price on this accumulator. And here's what we had in the regular accumulator contract. Again, you can just kind of go over this. And here's what it looks like again with the knockout. And that's it.